Hello everyone, it's Friday, December 5, and today we will dive into the charts of the euro and the British pound to uncover potential market trends. Yesterday, the euro surged to a new one-week high, but later in the day, it faced downward pressure following the release of Eurozone retail sales data for October, which showed zero growth after a modest increase of 0.1% in September. This development dampened buyer optimism regarding the European economy, which is clearly encountering challenges in the fourth quarter. Nevertheless, the European Central Bank remains optimistic, predicting that the economy will finish the year on a positive note. Additionally, on Thursday, the market received construction data from the UK, which tempered the pound's early gains. The Purchasing Managers Index for the UK construction sector fell to 39.4 from 44.1, limiting the British pound's upside potential. Despite this, bullish momentum propelled sterling to a new one-week high. Another element contributing to the dollar's decline and bolstering risky assets was a speech by White House advisor Kevin Hassett, who indicated that he anticipates another interest rate cut at the Federal Reserve's upcoming meeting. With the market pricing in nearly a 95% probability of a rate reduction, it's no surprise that the greenback remains under pressure. As we head into the weekend, it seems unlikely that market sentiment will shift significantly. While demand for risky assets persists, the future direction of the market will heavily depend on upcoming economic statistics. Now let's take a closer look at today's macroeconomic calendar. It includes data on German factory orders for October projected to show a modest increase of 0.3%. Additionally, we will see figures on France's industrial production and Italy's retail sales. However, the spotlight will likely fall on the Eurozone's GDP growth data for the third quarter. Current expectations hold that Eurozone GDP figures will remain unchanged, with 0.2% month-on-month growth and 1.4% year-on-year growth. If we see an upward revision in these numbers, the euro could strengthen against the US dollar. Also, on today's agenda are employment data across the Eurozone. However, this report is unlikely to attract much attention from market participants. Instead, the focus will shift to US statistics. Notably, there is no US inflation data scheduled for release today. This report, along with US jobs data, will be published following next week's Federal Reserve policy meeting. Of particular importance today is the US Core Personal Consumption Expenditures Price Index, which is the Fed's preferred inflation gauge. The core PCE index for September is anticipated to remain steady at 0.2% month-on-month and 2.9% year-on-year. If the figures come in below consensus estimates, they could intensify pressure on the dollar and bolster market expectations for an interest rate cut by the Fed next week. Moreover, the US will also release data on personal income and spending, along with the Consumer Sentiment Index from the University of Michigan. Positive readings in these reports could spur a bullish correction in the dollar. Turning to technical analysis, the 1-hour EUR USD chart suggests that a false breakout at 16.49, the middle of the range, would present opportunity to open long positions in anticipation of a rise to the upper boundary of the range at 1.1678, where bears are likely to step in. A false breakout at this level will create a selling opportunity targeting a decline back to 16.49. If the price breaks through this level and holds below it, the euro could drop to 1.1623 with potential further weakness extending to 15.91. At this mark, I would recommend going long on a rebound with a target for an intraday correction of 25-30 pips. Long positions at 16.23 and 16.49 should only be considered on the false breakout. Alternatively, if bulls manage to break above 16.78, it would be prudent to add long positions, anticipated a continued bullish run towards 17.03 and possibly 17.26. At 17.26, it would be prudent to look to initiate short positions on the rebound, aiming for a target of 20-25 pips. Short positions at 17.03 and 16.78 would be prudent following a false breakout. As for the British pound, the situation mirrors that of the euro. Bears are likely to regain control of the market at the level of 33.53. With today's macroeconomic calendar lacking significant statistics from the UK aside from the house price index, a false breakout at 33.53 would generate a sell signal, dragging sterling down to 33.20. If the price breaks below this level, the British currency could dip to 32.93 and then extend losses to 32.766. At this level, I would recommend going long on a rebound, counting on an intraday correction of 25-30 pips. Long entries at 33.20 and 32.93 should be set in the event of a false breakout. On the other hand, if bulls manage to maintain control over the market and the price consolidates above 33.53, the pound sterling could climb to 33.81, potentially reaching 1.3416. At this level, it would be wise to consider short entries on the rebound, targeting a 25-30 pip move. Short positions at 33.81, a 1-month high, and 33.53 would only be relevant in case of a false breakout. Best of luck to everyone.